Good afternoon. Here are the closing market comments for Wednesday, December 1st. Well, some strong Chinese economic data for the month of November were released overnight. That had a lot of the equity markets and stocks around the world much higher, also giving the green light to a lot of investors to go ahead and put money back into commodities. And with today being the 1st of December, a lot of first of the month buying took place, and grain saw some very sharp gains as a result. December corn up 21 and 3/4 cents at 5.51 and 3/4. July corn up 22 and 3/4 at 5.78 and a quarter. January soybeans up 40 cents at 12.83. July soybeans up 40 and a quarter at 12.96. Kansas City December wheat up 50 and 3/4 cents at 7.80 and 3/4, and Minneapolis December wheat up 44 and a quarter at 7.84 and a quarter. Outside markets much stronger, providing a lot of support for our grains today. Crude oil currently $2.52 a barrel higher at 86.63. The gold market up $3 to $4 an ounce at 1,388. The U.S. dollar index sharply lower for the first time in quite a while, down 54 points at 80.72. And the stock market seeing some very large gains, with the Dow up 259 points at 11,265. Livestock markets were mixed. December cattle closing 50 cents higher at 103.57, and December hogs closing 50 cents lower, finishing at 68.52. Outside markets had a very strong influence on our grains today. It began with China's November PMI coming in at a very strong 55.2 versus 54.7 in October. A PMI above 50 does indicate growth, so there is no indication of a slowdown in the Chinese economy, at least not based on these economic reports. This Chinese news did spur a rally in most of the major world stock markets, as well as a sharp rally in most commodity markets. Metals, energies, soft commodities, and grains were all sharply higher today. At this time, crude oil is up around $2.50 a barrel, and the Dow Jones Industrial Average is up over 250 points. Today is the first day of the month, and it appears a lot of first of the month money is flowing into all commodity markets. In the corn market, the funds were back in force today with new beginning of the month money to invest. The outside commodity markets are much stronger around the globe, which gave the funds an all-clear signal to go ahead and start buying again U.S. corn. The fate of the ethanol blenders credit is still uncertain. It appears that there are strong opinions on both sides of that debate. If the blenders credit were allowed to expire on December 31st, some people fear that 200 to 400 million bushels of corn use could be lost. Others believe that very little change in overall blending will be seen. Ultimately, it will come down to ethanol blending economics. If ethanol prices are significantly below gasoline prices, significant discretionary blending up and above the mandated levels is likely. If ethanol prices are above gasoline prices, discretionary blending would likely be quite limited. Now, this may be an oversimplified explanation. There's other things that may come into play as far as what might reduce ethanol blending due to gasoline prices and ultimately ethanol prices. Also, there is talk that blending of ethanol is actually cheaper than expanding refining capacity for someone who's already capped. So there's other items that come into play, but ultimately, the amount of ethanol that gets blended into the gasoline above and beyond the mandated levels will come down to the ethanol blending economics. I pulled up a chart that plots the gasoline futures price in the red line and the ethanol futures price in the blue line. As we can see, most of this year, ethanol prices have been significantly below the gasoline futures price. If we look at the bottom half of that chart where it does plot ethanol minus gasoline price, we can see that for most of this year, ethanol prices were running anywhere from 40 to 60 cents below the price of gasoline. Now, recently, in late October and early November, actually a very, very strong rally in ethanol prices took ethanol up and above the price of gasoline, but we're now back to a price where ethanol futures today running about 18 cents per gallon below the price of gasoline, again, which is favorable for the ethanol blender. News in the soybean market, ending stocks of U.S. soybeans are expected to fall again in the USDA December supply and demand report, which will be released on December 10th. Exports and crush have remained very strong throughout the month of November, and both of them will likely be increased. No changes in the South American weather outlook. Most of Brazil should remain in good shape with the exception of southern areas of Rio Grande do Sul. Argentina is expected to see scattered rains, but the overall rainfall pattern is for less than average totals. That would continue the trend that we've seen over the last month. Export sales are expected to come in very large in tomorrow's weekly report. Wheat has been the leader here for the last couple of days. For 2 to 3 months, there's been a tendency for traders to buy corn and sell wheat. The thought process supporting that trade has been an extremely tight corn supply and demand balance sheet, while wheat supplies have been seen as mostly adequate. But we've seen now recently that supplies of milling quality wheat worldwide are in decline, and traders are now reversing the spread by selling corn and buying back the wheat. A number of world weather situations are supporting the overall idea of buying back short wheat sales. Eastern Australia is way too wet, with another 2 to 4 inches of rain forecast over the next week or so. Argentina is in a pattern of below normal rain, likely due to the La Nina conditions that are currently present. Southern Russia and Ukraine are expecting extremely cold weather to move in over the next week or so, and there's very little snow cover in those southern areas of the FSU to protect the winter wheat crop. And finally, 30 to 40% of the U.S. hard red winter wheat belt is extremely dry. Also on the bullish front, Egypt did buy 220,000 tons of U.S. wheat. This is the second tender in a row where Egypt has bought exclusively U.S. wheat. Taking a look at the corn chart today, and as you'll notice, we are now switching over to the March corn contract with December now in delivery. Very good day in the corn market today. New highs for the move at 567 today. We have now taken out the previous highs from earlier this week as well as the highs from last week. The short-term trend has now turned up. If we look at the technical indicators, they have also turned up. Today's close is right at that overhead resistance level where we have both the 20-day and the 40-day moving averages coming through. And from a strictly chart and technicals perspective, if we can close higher tomorrow, I think that would open up the door for a lot of chart traders to believe that we are now heading for the previous highs up above that $6 level. As I've mentioned on numerous occasions, the supply and demand balance sheet for corn is extremely tight. We can't afford to expand the usage anymore, and we can't afford to find any other losses of production around the world. So my overall thought process is to continue to look for this corn market to work higher over time. We will need to keep an eye on any new announcements regarding the ethanol blenders credit. If the credit was allowed to expire and was not extended for 2011, then we could see this market see a correction back to the downside and could push us back down to major support at the long-term uptrending line and possibly push us down towards 520, which was the previous March lows. My overall outlook is for corn to continue to work higher as we go through December and into early January. Turning to our January soybean chart, a very good performance in beans as well today with a high posted today of 1284 in the January contract. We've now taken out last Friday's high and also taken out all of the moving averages. So a very strong performance on the chart. The technical indicators also looking favorable, cleanly hooking to the upside with a lot of room to move. So looking strictly from a chart and a technical standpoint, the next level of major overhead resistance is going to be the previous highs up towards that 1350 level. We do have a very strong fundamental picture, and it's backed by an improving chart and technical picture today. We'll have to keep a close eye on the South American weather, but if it does remain drier than normal in Argentina, I think the probability of us challenging the previous highs sometime in December or as we move into early January still seem quite high. Turning to the March Kansas City wheat chart, and again moving to the March contract with December now in delivery, wheat had an explosive day to the upside, touching 805 during the trade today and closing just under the $8 level. After posting lows here about 2 weeks ago in the $7 range, it did take us about 8 trading days to rally 50 cents, and today rallied another 50 cents in just one day. The trend on wheat has turned up here in the short run, with today's close sharply above all of the major moving averages. Technical indicators also now have turned upward with a lot of room to move to the upside. Similar to what we're seeing in some of the other charts, wheat's next overhead resistance, 835, the highs that were posted earlier in November, and then possibly 843, the highs from earlier in August. fundamental picture for wheat has improved, with more and more of the world's supply of milling quality wheat being reduced to feed grade quality due to weather issues. With the overall trend upward and corn and beans also rallying, it definitely looks as though this market is prepared to challenge the previous highs up in that 825 to 850 level over the next few weeks. That'll wrap up this afternoon's broadcast. Thanks for joining us, and have a good afternoon.